Well, good afternoon. I thought I'd bring this story to you. For those who may not know or those who may know, we can share and collaborate together with the story. Now, I think that it's very relevant when you consider the financial scheme of things. We're going to get right into the story. And as you can see by the title, Singapore's DBS to buy Citigroup Taiwan consumer bank assets. This story comes out of Yahoo News. However, it is based from Bloomberg. Okay, so it goes on to say that DBS Group Holdings Limited agreed to buy Citigroup Incorporated's consumer banking assets in Taiwan as Southeast Asia's largest lender pushes ahead with plans to boost its regional presence. The Singapore bank will pay cash for Citi Consumer Taiwan's net assets plus a premium of $707 million, which will be determined at the close of the deal. That's expected mid-2023. The DBS plans to inject $2.2 billion into the Taiwan unit, and $1.2 billion of which will be used as capital to support incremental risk-weighted assets and capital needs, it said in a statement on Friday. The purchase is part of the DBS's long-standing goal of growing in a large emerging market. Last year, the lender agreed to pay $1.1 billion for a 13% stake in China's Shenzhen Rural Commercial Bank Corp., less than 6 months after it took over India's Lakshmi Vilas Bank Limited. Quote, notwithstanding COVID-19, we believe that Asia's long-term growth trends remain intact, close quote. This comes from the DBS Group Chief Executive Officer Piyush Gupta. He said in a statement on the following Friday, this past Friday. The acquisitions we have made since the start of the pandemic have given us a platform to build a meaningful scale in some of our core markets. The acquisition, this one is no exception, close quote. DBS will fund the transaction with excess capital, and the deal won't impact its ability to pay dividends. DBS shares fell 0.3% as of 12/15 in Singapore, compared with 0.3% advance for the Straits Time Index, and that was as of the publishing of the story, which was the 27th of January. Citigroup's strategy. Now, for Citigroup CEO Jane Fraser, the Taiwan sale is part of an ongoing strategy to simplify the New York-based bank, do away with its retail banking operations in 13 different countries across Asia and Europe, and focus on high-growth businesses such as wealth management. It will also focus on investment and corporate banking in Asia. Earlier this month, Citigroup sold its consumer assets in 4 Southeast Asian markets, including Indonesia and Thailand, to Singapore's United Overseas Bank Limited for about $3.6 billion. The Asia and European asset sales are expected to release about $7 billion of allocated tangible common equity over time. Citi Consumer Taiwan has been operating in the country since 1985 and currently has $2.7 million in credit cards. I apologize, that's 2.7 million credit cards and unsecured accounts, about 500,000 deposits and wealth customers, approximately 3,500 employees, and 45 branches. At the end of September, it had an earning asset base of $20.3 billion and total deposits of $15.1 billion. The DBS deal will accelerate its growth by at least 10 years, making it Taiwan's largest foreign bank assets. DBS CEO Gupta, who has previously expressed interest in Citi's assets in India, said on Friday that after taking a look at all of the U.S. firm's books of assets, it decided to narrow down on Taiwan because it was the most attractive. Quote, and a few other assets that we looked at, we chose to pass, he said at a press briefing. There is also a commitment to keep all of Citi's 3,500 workers in Taiwan and not to retrench them over the next few years, Gupta said. Now, still, DBS does expect some employee attrition between 10 and 20% over time, he says. The DBS latest acquisition gives it a leg up in Greater China and is set to boost 2023 profits by about 3%, according to Bloomberg intelligence analyst Sharni Wang. It's much easier for companies to make acquisitions in times of crisis, in this case, caused by the pandemic, and by players who are struggling and then positioned for recovery, said Terrence Chua, an analyst at Phillips Securities Research. That's what DBS is doing and has done with its string of purchases in the past 1.5 years, he says. Quote, taking advantage of its strong balance sheet and making aggressive steps to expand. Morgan Stanley is advisor to DBS on the deal. One of the important factors that I want to bring out, the story is done. There's one important factor that I want to bring out. I want to take us back up here so that you can see exactly who this one company is. Now, it's so eloquently added Shenzhen's Rural Commercial Bank Corp. This particular company has hands here in the United States, very big hands. That particular company does a lot of dealings in architecture. All of this stuff has tentacles that reach to the United States. So in as much as some may say that this has nothing to do with us, I submit it has a great deal to do with us, that they are building this particular area up to be a great superpower. Whether or not China does absorb Taiwan once again or not is of no consequence. The fact is that as far as real estate is concerned, if you look into this company, and I will definitely leave you the link below in the description once this is published, you will see that this has catastrophic, huge means for us here in America. I want to thank all of you for tuning in to us. Today, we are going to have several of these, and they will be back to back, as we do have several stories that I did not want to add all together. I want to thank all of you for tuning in. This is Felicia Lockhart. This is Headlines with a Voice, and this has been the Lockhart News Brief. Take care.
Lockhart Perspective.